Now that we have learned how to calculate adjusted EBITDA, we turn to the next part of the enterprise value calculation, which is our acquisition multiple. Typically, if there are close publicly available comps, we will try to benchmark our multiple in some way to them. For more detail on how to do this, you can turn to the Wall Street Oasis Valuation course, but here is a snippet of our comps output from that course. We can see that there is quite a range of multiples here, but this can be a nice guidepost for what fair market value is on our target. But sometimes we don't have a rich database of public comps. In that case, we will often turn to precedent transactions, which is also covered in more detail in the valuation course. Suffice to say that precedent transactions will show you historical multiples at which other comparable public or private companies have sold for. Sometimes precedents can be an even better guide because these are takeover scenarios for which a control premium is baked in, whereas public comps do not contain a control premium and may not represent a market clearing price. Quite frankly, since the majority of PE deals are private deals, the method of precedent transactions will usually be sufficient. Lastly, I want to mention that in the rare event you do work on a public to private transaction, you'll have to make sure that whatever multiple you use implies a premium to the current share price. In other words, the control premium. If you offered a price below the current trading value, shareholders just wouldn't accept your offer. So regardless of what the comps say, if you offer a multiple that's below what the company is currently trading at, then there would be no way to consummate a deal.